Hi guys, this video is one of my stock market trading course videos. I've put it near the beginning of my course just because it's so important. It's about how you can manage risk as a stock market trader. If you fail to manage risk as a stock market trader, I can tell you, you most likely will fail as a trader. This is probably the #1 reason that traders fail, and they just give up and become frightened of the market. So it really is very important, and I want to try and encourage you and empower you to take complete control of this from the beginning and allow yourself to feel like this is an enjoyable experience and you are in control. So let's just get started on how you can do this. So what does it actually mean to manage risk? Managing risk means that you are controlling your losses in such a way that your trading is sustainable. So it's making sure that you're protecting your capital balance and preserving it. So I said here it's the most fundamental lesson you can learn in your journey to becoming a successful stock market trader. So how do you do this? So managing risk, step 1, you need to divide up your capital into portions like a slice of cake. You need to decide how much you want to risk on each trade, and this should be based on the size of your capital overall. So as a guide, it should be about 1.5 to about 1% to 1.5% risked on each trade. So you don't want to lose any more than about 1% on each trade. The reason we say 1% is because it would take 100 times of you getting it wrong before you lose your capital balance. So that is a lot of mistakes, and even in the beginning, traders don't make this many mistakes typically. Certainly not in a row, but you're just never going to lose all of your capital balance in this way. So it completely protects your capital balance. It's not going to make you frightened while you're sitting in trades, and it's not going to ruin your decision making. You're going to be able to completely focus on what's happening on the screen and not be worried about losing money. Some things you have to be aware of regarding how much you risk on each trade. So I've said here that the idea is to stay in the game and make profits overall. So you need to be aware that you may take some losses in a row before making profit again. It can be typical for traders to take 3 losses in a row or 4 if depending on the strategy that you use, and depending on how good you are as a trader. It could be less than this. It could be up to about 4 or 5 even. Hopefully not many, not as many as 5, but it could be 4 losses in a row. So imagine if you risked 20% of your account balance on each trade and you've just taken your 4th loss in a row. You've now got 20% left of what you started with. At this position, you're going to absolutely be petrified of losing the remaining bit of money, and you'll just be feeling depleted and just quite negative about it all, and like you've been bitten by it. And this is the type of thing which causes traders to just give up at this stage. So I said here, you're not going to, the thing is, you won't actually know whether your strategy would have worked or not if you give up at that stage as well. And the new trader isn't aware, possibly, that even successful traders can take 3 losses in a row. So you're just going to wipe out your ability to continue and to find out whether it really would have worked or not. It's also going to ruin your confidence, and you're probably, if you make a decision not to continue, it's probably going to finish you off, in terms of your learning and everything. So how do you, in a practical way, how do you restrict the amount you risk on each trade every single time, regardless of the market you're trading or the specific setup that you're trying to get into? I'm just going to explain how you can do that right here. So you can control the value of your stop loss regarding the trade and the market. So as an example, I've put £100 risk on each trade in this example. You can also see another video I've got on my channel about entering a trade with IG. I explain really practically on the screen how you can do this in the IG broker account. This example I've got here is based on TradingView. If you want a discount to the TradingView software, you can get that linked below in my channel. So I brought up a buy ticket here, and the presumption is this is my trade setup. I want to get into the trade in the middle of these 2 boxes along this line. That's my entry price. I want to set my stop loss down here at the bottom of the red section, and I want to take my profit up here at the top of the green section. So I've tailored these prices, the price boxes, to match what I've got here on my diagram. So the stop loss price is 148.86 down here, and then the take profit price is 169.72 up here. And then, so once you've set your price in here in the deal ticket, what you do is you control the number of portions that you enter. So I controlled them such that the value of my stop is £100, 100.14, got 14 pence as well. So what you do is you etch this up or down depending on how much you want in this box. So, you know, if I put 16 there, it might say 110. If I put 13, it might say 85. You know, you just move it around until you get to the amount that you're happy with, and then buy. So I hope all of that makes sense. If you purchase stocks without a margin, so the previous example I gave was on the basis of someone trading with a CFD account. It typically uses margin. If you actually purchase the stocks outright without margin, and you own the underlying asset, you can get a helpful guide on my blog about exactly how to control the amount of your risk when you're entering a trade in that scenario. So I've just copied there, given you a screen print of the heading that you need within the article, and the article is linked below this video. How many positions should you open at once? So I only have one trade open at once. I've said here this decreased as I became more accomplished as a professional trader. So you might find this odd that it actually went down instead of up. The reason it went down is because when I became more accomplished as a trader, I realised that there's a whole load of things that I need to be aware of continuously. You know, the more experienced I become, the more things I'm aware of that I need to watch on a chart while I'm in a trade, or while I'm waiting to get into a trade, or, you know, while I'm waiting to close one. So once you get to that level, you're going to understand that it would be impossible to be running several different trades at once. It would literally be impossible. So it went that way round for me. I certainly don't recommend you open more than one trade at once. You know, it goes back to the 1% risk issue that we talked about. But there's another reason. It makes your risk worse, not just because of the value. So if you've got 4 trades open at once instead of 1, obviously you're risking 4% instead of 1 now. But there's another bit to this which makes it even worse. If something happens to the market, those 4 trades are going to be affected by the news or whatever it is all simultaneously, and you're going to lose them all potentially. They're going to smash down and hit your stop. So you're more vulnerable when they're all open at once as well. So I hope all of that makes sense. That's the end. If you've got any questions about managing risk, please reach out to me. I would be glad to help you. The email address is traderpro8320@gmail.com, and I wish you the best of luck. If you think I deserved it, please give me a thumbs up. It really does help my channel to grow, and I'd love it for you to share my videos or become a member of my Patreon channel. That's linked below, and I wish you the best of luck on your trading journey. All right, thanks a lot, guys. Bye.